We're half an hour away from the Open in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Good morning. Let's get to your top stories today. A cautious start to stock trading across the region ahead of some key rate decisions. Of course, you have the Fed plus other central banks on deck. You have Chinese shares also in focus after two straight sessions of losses and these continuing economic headwinds.
U.S. President-elect Donald Trump announcing plans for a $100 billion investment from Softbank while also appearing to soften his stance on the looming TikTok ban.
Plus, we look at how China's factories are bracing for new and potentially stiffer tariffs weeks before Trump's White House return.
All right, we just said that stocks are looking a little bit cautious, and yes, perhaps they are, given the amount of central bank decisions we have over the course of this week. You've got the BOJ, of course, in Southeast Asia. There's Thailand, Indonesia as well, among them Philippines, but also the Fed, and that expectation we could see a hawkish cut in these days as well. Really, the session sentiment is going to also be dominated by what's happening in the tech space this morning, given we had Broadcom continuing to add to its rally overnight. That was really kicked off last week by those earnings coming out. We'll be watching some of those key suppliers because that's actually what managed to drive the US session higher. NASDAQ, just a couple of days left in the year, but we still found time for a fresh record high for that benchmark. And you are seeing TSMC, for instance, one of the key suppliers into Broadcom, moving higher for another straight session. So that's the state of play across Asian equities today. You do see the Kospi a little bit under pressure so far in the session. But let's change on, because really when it comes to pressure that we continue to see, I mean, look, how many times can we say it, really? We saw gains elsewhere, but really a Golden Dragon Index continued to slump. And you see here that drop of more than 2%. Not only were investors really reacting, of course, to the data that we had yesterday, retail sales just telling us that there needs to be more stimulus coming through. You've also got those continuing to rise geopolitical tensions, and we can get through the details of TikTok, but there are other stories. Wang Yi, for instance, he's going to be delivering a keynote speech this hour. We could get some more clues on the direction, again, for Chinese foreign policy vis-a-vis Washington. But let's take a look at what we're expecting for futures today, because we have seen two straight days of losses for Chinese equities. We're setting up for a third here, Dave. What we're continuing to track, of course, is the bond yield as well, because even though we do see stocks under pressure, Chinese bonds continue to look quite buoyant, really, but that is that expectation, of course, that's building for further easing as well.
Yeah, and I think what's interesting there is a lot of people have brought up, while that rally in the CGB has taken place, is that really a good forward-looking indicator at these levels? Is a question for earnings out of China as well. So I was looking through my bond screen earlier on. I think it's only Switzerland and Taiwan that have a lower bond yield on the long end compared to China. So it's taken out already on the 30-year, at least here, to be more specific. The Chinese 30-year is now below where you are in Japan. The 10-year is still quite far away, but I guess it just shows you the divergence in inflation paths that we've seen over the last, 2 or 3 years or so. On the note that Bell was mentioning there, the stock drop in Hong Kong and in mainland China, so 2 straight days. The CSI 300 and the China X Index both closed below the 50-day moving average. We'll watch those very closely. Wang Yi is, of course, I believe, set to speak, if not already, this keynote address at the symposium on the international situation in China's foreign relations, effectively laying out, if you will, parts of the foreign policy ahead, of course, of Donald Trump coming back in. We are still in the window for a one-year MLF, and we have the jobless rate coming through out of Hong Kong later today. And on that note, back to the economy.
Well, I think it's really about how policymakers are also sort of, I'm not going to say massaging the data, but certainly passing over it and giving their perspective on those numbers that we got out yesterday, because that's really what we're seeing today in local Chinese state media, because it's that big focus on economic news, commentary, and, as we said, a day after the release of the monthly activity numbers. But a quick look, because there's the Communist Party official mouthpiece, that's the People's Daily, of course. It's laying down some policy prescriptions. It says a certain GDP growth rate must be maintained to stabilise employment, boost confidence, deal with external challenges as well. well. But it doesn't actually specify a precise GDP target to reach those goals. The paper also says economic policies should be more forward-looking and targeted, and that's all about trying to lay the foundation for a sustainable recovery.
You have state broadcaster, I think on Belt's point earlier on as well, the CCTV reporting on the outcome of a state council meeting chaired by the premier on your screens, of course, and the president. There we go, Li Chang. It says that China wants decisions made at the Central Economic Work Conference to be implemented sooner rather than later. Now, and also fairly proactively, the officials also reportedly pledging early issuance of special bonds next year and giving local governments the authority and flexibility to decide where to use those funds. And as markets grapple and try and latch on to just any clue of what policy looks like next year, when inflation, consumer confidence, the property market really shows signs of bottoming out, it's remained, to Belt's point there, simply a tactical trade. As it pertains to the equity markets, on the CGB space, it's been long, and that's done enough to bring dinner home for you guys. Let's bring in Ngai here with us on set. He'll be joining us for the greater part of this hour. Greater China Chairman and Senior Partner at McKinsey and Company. Good morning, Joe. It's nice to see you.
Good morning.
I think we started out the show here by talking about, Donald Trump's coming in. We don't know what tariffs will look like. We know they're coming. You mentioned that expect China to be fully prepared. What do you mean by that?
Well, I think that a few years ago when the global economy started looking into how do we think about tariffs and all that, I think that in that moment, I think China was much less prepared, right? China plus one was a relatively new phenomenon at that point in time. And then, the previous 20 years has been where if you are great at production, the rest of the world is very ready to take what you have, right, at a certain, cost and value for money. I think in the last couple of years, that has certainly changed. And I think that China, along with all the entrepreneurs that is on the supply chain, they are fully prepared this time around because, in the last few years, I think we'll say China trade with ASEAN is now surpassing that of North America. I would say that the global South trade, right, is now the most important trade route in China. I would say that China flights to the Middle East, to Riyadh and Dubai, is now actually the most busiest flights that you can see. So I would say that, yes, I think that there is a certain uncertainty coming in January, but I would say that entrepreneurs and business in China are more prepared than ever in the past 20 years to deal with this.
So that sort of trade evolution, do you think that that's enough to offset the tariff risk?
I think it will continue. Right. I think that basically, you see Chinese entrepreneurs these days looking at how do I diversify my business? We work with a lot of these companies that are looking into, I would say, building production in Eastern Europe, in other places where previously they're like, why do I have to go over there? Yeah. But these days they're doing joint ventures. They are actually exporting their production, technology to other places. So I actually see the upside here, which is where for other countries, the industrial policy can actually benefit from China actually helping and exporting part of that into their countries, building employment and making perhaps a little bit more even around the world in terms of where the industrial production is coming from.
I think you and I were talking right before the show started. The tricky question, though, is, what is, say, made in Hungary? What is made in Mexico? I mean, the target really is what is a Chinese export. How do we figure it out, number one? And how do companies almost bulletproof their supply chain so they don't get into the firing line? Even if I moved everything to Vietnam, for example, how do I approach that conundrum?
And I do think that's a very difficult question, right? If you look at the last few years, what has been very, very clear is that the U.S. trade with Vietnam, Mexico, pick your favorite China plus one country, has been going up. But you can see also the Chinese trade with that country, China, Vietnam, China, Mexico, has been going up as well. And China, U.S. is dropping. So, if you look at that, I think obviously there is quite a lot of supply chain movements going around. But, I would actually be less cynical about that. I do think that if you go to, Southeast Asia right now, I think that it's not only just the Chinese factories moving there. I think that they are doing a lot of joint ventures. A lot of local entrepreneurs are also building their own, I would say, industrial output. So if you look at the China actually industrial I would say capacity. Right. I think a lot of that is now in the more higher value-add goods, whereas a lot of the other ones have actually really moved out. And I would say that it is a genuine moving out, and it's enabling all these other countries to actually catch up in their own way.
Is there the risk of pushback, though? I mean, we already see it, for instance, from Europe and the global south. I mean, these countries also want to develop their own economies and their own businesses.
I absolutely think that is a pushback. And I think that for Chinese businesses to move the export out, I think that what they need to understand and realize is that the world doesn't only want cheap goods from you. I think the world actually wants you to come in here, help our company succeed, do real joint ventures with us, do technology imports and transfer together. I would say that, in many ways, this reminds me of 20 years ago when WTO happened and China opened up. What they wanted was the West to come to China, right, give a little bit of technology transfer, and we build things together. I think that that's what they need to do now with other countries, right? Because I have all this industrial capacity and, in some ways, efficiency, but I can't just export. I need to actually help you build up your industrial sector as well, and that's a new equation.
Is that business culture there, though?
I think it's changing. I think a few years ago, it would be unthinkable. I think in the past 2 years, I have seen a shift in terms of they realize that has to be, what am I bringing to local communities? How am I helping this particular, province, state, wherever, in wherever I'm going into, prosper? Not just absorb the Chinese capacity, but also help you participate, right, in this global industrial output right now.
The weakness in the domestic economy, I mean, to some extent has accelerated that going out and finding new markets for our goods. What are you seeing as far as domestic recovery is concerned, based on the client conversations you're having?
I think on the top line, I don't think you see a lot of movement. I think that the very stagnant, I would say low confidence, I think that remains. However, if you look at specific segments, I think you see very big differences, right? If you look at lower tier cities these days, very interestingly, third tier, fourth tier cities in China are growing faster than the first tier and second tier city, right? When you look at the slightly more senior in the population, right, they are actually more optimistic than actually the younger population. So you see some shifts in there. And I think that in the next 10 years, China is going to be something where, the segments are very important rather than just the top line. Because the top line right now is not very interesting. It has been quite stagnant. It's, we're looking at the 4.5, 4.2 right, GDP growth this year. But I think in the segments, you see that in local tourism. Yeah. You see that in a lot of the service businesses. I see a lot of growth in those sectors.
I was actually going to ask you, that's a good point you bring up, because how useful is it for a business using that 4.5? Because it used to be, businesses used to go, GDP growth, that should be my top line growth. But China's bigger than Europe. And, to your point, they're just different markets here. How useful still is a GDP print for businesses right now?
It is much less useful than before. I think that previously it was like, here's the 1.3 billion population, here's the middle class, and so therefore let's just, go in there. I think these days it is, we call it the granularity of growth. You got to look much more granular in terms of what segments you're going into, what tier of cities you're going into, and what are services you're going into. And what I see these days is that if you look at the lower tier, there is actually more movement there than the upper tiers, right? So what we see overall as a very stagnant economy, there's still quite a lot of companies in the micro segments, right, who are doing very well.
All right, Joe, stay with us. That's Joe Ngai there from McKinsey and Company, who will be joining us at the bottom of the hour. But still ahead on the China show, Donald Trump meets with the TikTok CEO and says there's a warm spot in his heart for the video sharing app that's facing a ban in the US. So, yeah, it does appear to be a softening stance. We actually saw Donald Trump wanting to ban this platform a couple of years ago. Now, maybe he's having a change of heart. But certainly that is one of the key companies, key apps in focus with him coming back into the White House. And actually on that point of Beijing-Washington tensions, we leave with some live pictures here. The Chinese Foreign Minister Wang Yi speaking at the symposium on the international situation and China's foreign relations. We'll get more details from that just ahead. This is Bloomberg.
We'll take a look at TikTok. You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok had something to do with that.
That was the US President-elect Donald Trump speaking at Mar-a-Lago, where a source confirms he later met with the TikTok CEO, Chu. That meeting came ahead of a ban on the platform that's set to take effect in January. So let's get the details with our Bloomberg tech reporter, Newly Purnell, joining us this morning. And, well, I mean, TikTok isn't going to go down without a fight now. We know that they're taking this, it seems, all the way to the Supreme Court.
Right. And as you said, due to be banned January 19th, and the next day, Donald Trump's inauguration, and they're saying they're going to the Supreme Court and saying, because he's coming to office and there could be a change in, for example, the Justice Department, which would enforce some of these rules, take another look at it, essentially. And, you know, it's a huge market for them, 170 million users there, one of their biggest in the world. And yeah, they see an opportunity now to say, hey, you got to revisit this.
Well, why has he, what's behind the seeming change of heart?
Right. Well, we saw some footage there of him talking about how the platform was really important for Republicans and for him in the presidential election. You know, there were some very memeable moments, you might say, in his campaign where he went to McDonald's, he got on the dump truck, he did these sort of, you know, quite colorful things that, you know, performed really well on TikTok. He said that the app was also important for helping other Republicans engage with the youth. He was citing, you know, his popularity with the youth. And, you know, the platform's popularity is growing. More and more adults, not just kids, are using it. And so perhaps he says he's got a warm place in his heart for it. He said different things about different social media platforms over the years, but it seems now he's maybe you know, viewing it in a more positive light.
What did we learn about the meeting between Trump and Chu earlier?
Yeah, very few details really have emerged, but yeah, we've reported that they did meet together. We don't know what it's about. ByteDance hasn't said anything about it, but he's, you know, he would be the TikTok CEO, would be the latest in many tech CEOs who are either donating to Trump's inauguration campaign or actually going and meeting with him in person. So yeah, this long line of tech luminaries going and visiting him in Mar-a-Lago or contributing to his campaign.
Okay. Newly Purnell, thank you so much, our tech reporter there on TikTok. Let's stay on theme here. So, U.S. President-elect Donald Trump, and this now concerns Softbank. Well, it says that the company plans to invest $100 billion in the country over the next 4 years. Have a look.
Today, I'm thrilled to announce that Softbank will be investing $100 billion in America, creating 100,000 American jobs at a minimum. And he's doing this because he feels very optimistic about our country since the election.
My confidence level to the economy of the United States has tremendously increased with his victory. So because of that, I'm now excited to commit this $100 billion and 100,000 jobs into the United States.
Let's bring in Min Jong Lee, our tech reporter, as well, to take us through this specific story. Yeah, and Min Jong, yeah. So give us the details here.
Yeah, it was kind of a surprise, but given the big 100 billion figure, there's more to come, definitely. We don't have a huge amount of details, but we do know that the 100 billion will be spent on AI-related infrastructure, data centers, semiconductors, and energy. And this is all kind of in line with what Masa Son has been focusing on in the past several months when it comes to investments for SoftBank. So it does they are kind of aligned with SoftBank's plans for investments, although 100 billion is a huge figure, and we don't know how all of that will be financed. So more to come on this, definitely, going forward.
Yeah, well, and that's sort of the question as well, Min Jong. Is this new investment, fresh investment? Because we already knew ahead of the election that he was looking to tip money into the U.S. anyway.
Right. It is certainly new in terms of like the headline figure, and we do know that in the past they've had some similar move in 2016 when Son said they will invest $50 billion in the U.S. And I don't think anybody really kept track of whether that was all spent. But we do know that this is another $100 billion fresh amount of money to be spent in the U.S. The question remains how it will be financed, but Softbank and Masa-san has always been so creative about financing these deals. And it doesn't mean that all of this will be SoftBank money. There's a good chance, I think, Masa will engage with other investors and companies to fund this $100 billion. But definitely, there's there's a lot to be answered and a lot to be asked about this $100 billion US dollars.
Yeah, we're just showing a chart now, Min-jong, taking a look at SoftBank's cash pile and again, going to your point of how they could finance this. But in terms of the possible areas, we know that SoftBank has broadly been talking about making a major AI-led investment or AI industry investment. Is this kind of the area?
Yeah. Yes, that is definitely one key area we can anticipate where the money will be spent on. And given this huge amount of a figure, like if it's like 100 billion over the course of 4 years, it's like 25 billion a year. But so it makes sense to think that these will be invested in potential M&A deals, investments in big companies, which then would make more sense in terms of financing or do some big project in project financing to finance this figure, because now, as you just said, their cash pile is about 3.8 trillion yen, which translates to about 25 billion US dollars. So they do not have that 100 billion money right now. So it'll be interesting to see how creative Son is in financing all this money for what kind of deals.
All right, that was our Bloomberg Tech reporter Min-jong Lee there, and SoftBank actually is rising 4% today. So even if it's not fresh investment, investors still like the sound of it anyway. But
we'll take it in any form it comes.
Take it in any form. I mean,
Thank
tech was the big gainer overnight as well, so that could be playing into the session. Hong Kong not looking to catch that mood though. We're seeing equities pointing to the downside. We'll have more ahead. This is Bloomberg.
It's looking like we're going to get a day 3 of losses or weakness across these markets. We are called 120 points to the downside on the Hang Seng Index. Futures are down about 20 points. This is the Singapore contract. I mean, the rally is, I guess, in many ways still largely in the bond markets, although that being said, we are seeing an early pickup in yields, but certainly the direction of travel has been down on these yields in CGBs.
Yeah, down on yields and also down on stocks. A couple of analyst actions, though, standing out. Maybe we'll see some upside for individual names. Some of those standing out. There's Black Sesame, Horizon Robotics. They're both EV software-linked plays, rated new buys by respective analysts there. New China Life and HKEX as well. Those have had some changes. Welcome back. You're watching The China Show, and we're counting down to the open of markets this morning. We had the Nasdaq reaching a record high overnight. We saw equities moving higher on Wall Street across the board. Today, actually in Asia, we're still catching that drift, except in China. Really, once again, here we're seeing it pretty much setting up for losses. Investors continuing to pass that economic data we had yesterday, particularly the disappointment around the retail sales figures, telling us that there's still that need for further easing coming through. Great story that we've got with Abhishek just coming up in a couple of minutes. The risky bets some retail investors are taking instead. Yeah, they're going really down, not the valuation sort of spectrum, but really the price spectrum. A lot of the penny stocks are doing very, very well. So we talk about how range bound, if not slightly to the downside, the trend has been on the major benchmarks in recent weeks. A good example, and Abhishek will unpack this for you, the CSI 2000 has outperformed the major benchmark, I think by 20 percentage points, if not mistaken, since September. Anyway, small can be good every now and then. Okay, we're opening flat right now on the CSI 300. Most of the benchmarks
And some of the heavyweights, bottom of your screens, are moving also to the downside here. Let's have a look at the open, please, in Hong Kong. So a couple of things in Hong Kong. Well, you look at that change here, I forgot to mention that Shanghai and Hangzhou are warning of heavy pollution, air pollution ahead. It is a time of the year. I think a yellow alert was issued on Monday. I take every opportunity to do a weather report here. But yeah, go ahead.
I think that's front-loading of factory orders, maybe. We always see weakening or worse air pollution off the back of that. Maybe that's part of it.
Well, it's winter, you had the steel. And then, yeah, you're right, because some of the PMIs and new export orders.
Lunar New Year is earlier this coming year.
So they're bringing it forward.
Maybe.
Okay.
Anyway, back to your weather reporting.
Well, I mean, that's good. That's good pollution then, in that case. Breathe in accurate leading indicators here. 2-day losing streak on the Hang Seng, 3 days currently. The fixing today was near 1,000 pips stronger than the estimates, which I guess is the biggest spread going back to, I think, the summer. A couple of other things to track here. So we talked about a lot of these changes to analyst ratings here. So HKX, coming up on your screens, equal weight at Morgan Stanley. Price target there, 310. We're trading at 296. Costco Shipping, that's another one that's out of city. Price target there, 1330. New China Life, that is also a city call. Cut to neutral, the price target at 2560. And Weichai Power, I believe that is a Goldman call. Let me just look at my list here. Yes, that is a Goldman call, reinstated by A share, 1630 renminbi a pop. That's a Hong Kong listing, of course, you see there on your screens. Okay, as promised, small is good sometimes, right? Abhishek Vishnoy is with us right now to take us to the taking stock piece of the day. And yeah, so what kind of outperformance are we seeing, Abhishek?
Well, David, like you were mentioning, small is indeed beautiful and small can become great. That's what is happening in China market since the major indexes made a peak in October. The lowly priced stocks, they have outperformed their larger peers by 15 odd percentage points, over that period. And, while it looks like more riskier bets, under the hood, it's actually a good signal. Small stocks are more geared towards domestic economy. So, that signals first a more confident outlook for domestic economy. Now, these are smaller, amateur retail investors which are coming in. So institutional money is still on the sidelines. But this also, gives a color, a taste of risk appetite, a bit of broadening of things on China. Economic data might be weak, but there were a lot of factors at work. A lot of front-loading pertaining to Singles' Day happened in October. Now, that's one reason why retail sales were also weak. So, adjusting for that, there is a bit more confidence emerging, from local retail investors in China. Now, if you look this in context of Asia and the world, actually China is leading a trend. Smaller stocks are not just doing great in China, they're doing awesome in India as well. India's small cap index has just made a record high, I think a string of record highs. So risk appetite there too. And this is where China is leading. US is actually moving into a favorable period for smaller stocks to outperform their larger peers. So I think this is one place and one theme which is going to continue till Trump takes on officially the charge of US on Jan 20th.
Okay, so roughly one more month to go, maybe, of this, Abhishek, or maybe a bit longer too. But when do expensive stocks come back into favor?
Well, in China's case, nothing is expensive, right? I mean, MSCI is at 64, which means 10 times of PE, which is way below 5-year average of about 11.5. Earnings at about 6.5 per share, at the index level. So they're not really expensive. They would come back in play possibly, in March. Once Trump comes in, tariffs and other export controls come out in the open, and then China reveals its playbook, how much exactly it commits and starts doing when it says moderately loose monetary policy, when it says proactive fiscal policy or lifting consumption vigorously. That is what, that's the color that we are going to get. That's the answer that we are going to get in March policy meeting of China. And that's where, I think, the playbook would be revealed, and a lot more confidence would come in to take a bet, a structural sort of bet on whether China should be moved from an aggregate neutral level that it is trading right now in global portfolios.
Okay, Abhishek Vishnoy there, our Bloomberg Equity senior reporter. To Abhishek's point, right? So it's hard to underscore the extent of the outperformance on the CSI 2000. So year-to-date chart, but you really see this diverge right when the policy pivot took place. So 34% up for the year, 10% for the CSI 300. So yeah, let's see how long this lasts. So there have been really bright spots in this equity market, despite, of course, the overall gloom on the benchmark level, Bill.
Yeah, and I think it's also interesting on that point of the amount of margin trading that we're seeing as well, and that's also been spiking a bit higher. So another indication perhaps that, again, this is sort of being a bit more led by retail investors. But let's bring back Joe Ngai. He's Greater China Chairman and Senior Partner at McKinsey and Company. And I'm looking at your notes and I can see that you're saying that 2025 is going to be the market reality check. Sounds ominous.
Yeah.
Well, it's ominous, but it is actually the reality. I think that we have actually been through the ups and downs of expectation management, been through many press conferences, with announcements and all that. I think that look, it is what it is, and I think that valuations are showing what it is. I think people's expectations on we just went through with a lot of our clients the 2025 budget process. And I would say that people now finally have a very realistic budget for 2025. I think previously, I can tell you that in China for the last 10 years, it has been that, okay, let's just pick a number next year, 15%, 20%, 25%. How much do you want to grow? Right now, it's much more realistic and, in some ways, much more pragmatic. It shows you a little bit that it has sunk in. This is where it is, and let's fight through this market. And that is the reality in China these days.
Do you think price competition still dominates most sectors?
I think, unfortunately, price competition will continue in 2025. I think that in many ways, the way of how Chinese companies compete is that there are actually quite a lot of companies doing exactly the same thing.
Right.
Differentiation is not is not great in China. So therefore, I think that price competition will continue until you see more consolidation, which I also fully expect to happen in 2025. And that I would say is long overdue. And I really hope that there will be more coming up. But that really involves bankruptcy laws and many other things to be in place for that to happen in the proper way.
I mean, there is that call for consolidation, and maybe that is a way that they manage the competitive landscape and those extreme pressures that they face. What about, though, there's a shift maybe in the way that companies operate? And I'm thinking about recently there was the directive from Beijing for PDD or Pinduoduo to revamp its returns policy, and that was because it was causing so much disruption in the e-commerce sector.
And I think that goes back to the point of the vicious and ferocity of the market, right? I mean, I think companies like Pinduoduo and in many ways these platform companies, they have been very successful. However, what they have caused is extreme price competition in a very transparent market on the platform where everyone competes by price, by clicks. I think that really leads to quite a lot of disappointment and in many ways, small businesses suffering. And I think that that's something where it's catching up a little bit now to the regulators that, look, it might be great for that one big company, but at the same time for the many, many, many small and medium-sized businesses, while I have a way to expand my sales, the margins are really suffering. And I think that's where in China you see right now that the output is growing, but the margins are shrinking, right? And that's why when you see in individual companies, that pain is still being felt everywhere.
Are we at a point where it's different per sector, but are more foreign companies now not able to compete then?
I think foreign companies are going through a very massive transformation right now. I think in the past it actually has been, I was called planting flags in China, right? We talked about before the 1.3 billion, market. We talked about the 400-500 million middle class. I think that you almost can say that, well, all I need to do is participation. I think now participation is not good enough. Being present in the market is not good enough. I think that the age of, I would say, sort of guaranteed success is long gone. And right now what you're seeing is, do you have a proper value for money? Are you, cost efficient? Are you, prices in China goes down 10% every year, right? As opposed to everywhere in the world where you can have some price increase, this market as it goes down. Are you prepared to make yourself more efficient every single year? And that is the way that have made the Chinese companies very, very successful and efficient, but at the same time, for multinationals, it has been quite painful to face this market.
I mean, you really wonder how it feeds into the deflationary mindset when you have those sort of price reductions. But, I mean, there's no better example of foreign companies not being able to compete than in the EV space. And, Dave, that really stood out to you as well.
Yeah. So you might be exaggerating here, but, you can hit the nuance here, that the cheapest EV in China might at some point become cheaper than the most expensive iPhone. That's a problem for many companies in many sectors, if that's the poster child of what they can do.
Well, the cheapest EVs in China right now are around 10,000 US or so around there. And next year in 2025, I fully expect that number to even come down another 10-20%. Now, when you look at that trend and you look at some of our top of the line appliances, right, whether that be the foldable phones or whether that be your fancy washing machines, I think at some point, right, it is totally feasible that the price of a EV in China will come close to our home appliances, right, and that I think is is a way that makes China the largest market in the world in terms of cars and drivers, but at the same time, I would say that for traditional German, Japanese, U.S. Auto manufacturers, that is a massive problem.
Is it an existential problem? Quickly, and I have one last question for you, if you could just comment.
It is an existential problem if you don't find a way around it, and maybe the only way in the short term is through tariffs and other protectionist measures, but in the long term, it doesn't make any sense if you're 3 times more expensive than the cheapest one in the world.
The other thing we haven't seen yet is consolidation across most of these sectors. And, we have a story out today that talks about how bankers are bored, they're scared for their jobs, and there's really nothing to do. Do deals come back next year, and in what form do they come back?
Consolidation needs to happen in China, right? I think that, this, pricing competition, this, excess supply, I think that has to be consolidated. The question is that it's not a banker-led market. This is very much something that actually needs to be state-led, needs to be state-endorsed, needs to have a lot of other stakeholders that are in there to participate. It's not just a private sector action. So I think that's where the bankers, they're just one piece of it, right? Yeah. They can work as hard as they want, but it ain't going to happen if it's only them. So I think the question is going to be whether China on a national level actually believe that consolidation needs to happen. I see some of that happening, but the question is, look, that pace needs to be 5 times what it is right now.
It needs to come from the top down, I guess, in some ways. Joe, fantastic. We can use this as a jumping off point for the next conversation. Happy New Year. Hi to the team from us here as well. Joe Ngai there, Greater China Chairman, Senior Partner at McKinsey and Company. Right, a couple of lines coming through here out of South Korea. Let me just go through very quickly. So Korea will begin implementing the budget on January 1st. They'll be swiftly allocating the budget also to revitalize the economy. That is according to the acting president. It's very weird to say, but it is a reality right now. He's saying they're at a cabinet briefing. Bill.
All right, still ahead as well, China's factories looking to protect their businesses ahead of Donald Trump's return to the White House. We'll look at how they're doing that, going about doing it. Details ahead. This is Bloomberg. Taking you to some live pictures here, you can see China's Foreign Minister Wang Yi there just exiting the stage. He has been addressing attendees this hour at a symposium, also giving some indications as to what's next for the US-China relationship. He has said that he hopes that the US government is going to be making the right decisions. Of course, we're pretty much just 1 month out now from President-elect Donald Trump retaking the White House. But ahead of him returning there, we have, of course, been speaking with different guests about how companies are going about managing not only those external challenges, but also the internal challenges that are being created, for instance, in terms of a very aggressive discounting wars and how possibly that also could be playing out in the deflationary mindset. That was something we were just speaking with McKinsey about. Joe Ngai there, the China chairman and senior partner. But let's also get the reaction from our reporter, senior reporter James Mager in Beijing. And James, you were listening in on that conversation. So what stood out to you in particular?
I mean, I thought his comments about how foreign companies are really struggling to sell in China, and they're really struggling to sort of bring down their pricing in line with the deflation that we're seeing here was quite interesting. And I think also, that speaks to how Chinese companies are also really struggling in this environment. I mean, obviously BYD, speaking about EVs, BYD is being successful and is making a profit, but there are lots of other Chinese companies, many other Chinese EV companies that are not making a profit. And as you say, it's likely that'll have to be consolidated. And that's the same story across the whole economy, basically. Some sectors are seeing really deep price cuts, some sectors are seeing less. But for Chinese companies generally right now, the domestic market is not really profitable, and it's not a great market to be selling into. And so they were increasingly going overseas, trying to export to the US, trying to export to other places, because prices are higher overseas and they can make more of a profit overseas. And so I think looking forward to next year, you're seeing, if deflation continues in China, that situation here is going to continue, and then we may see more barriers to those exports going overseas. So as a Chinese company, it's a really difficult position to be in right now.
I guess, James, to your point, one is obviously something that they have to adjust to. The other one just happened to be another blessing and tailwind here. The question I have is, do we just expect this to continue, if not to accelerate even further going into not just next year, for the foreseeable future, really?
You mean exporting to prop up the lack of domestic demand? Or?
Yeah, whether that's exporting outside or increasing capacity outside.
Some companies are looking to boost their capacity outside of China to sort of get around tariffs. That was obviously the story during the first Trump administration and through the Biden administration. Chinese companies going overseas to Vietnam, going to Mexico especially, to try and avoid the U.S. tariffs and to be able to still sell into the U.S. I think that sort of planning or that sort of play is probably much less reliable now. You've seen the U.S. putting tariffs on Vietnamese and Thai and other goods which are being made by Chinese companies in those countries. And so, especially if Donald Trump comes in and puts tariffs on the whole world, or specifically targets Chinese production overseas, the Chinese companies' strategy of trying to avoid tariffs by not being in China but being somewhere else in the world that's not the US is not going to be successful. The companies that we spoke to, some of them are still planning to do that. Others are just holding back, waiting to see what is going to happen next month, or what's going to happen over the next year. What is the US going to do? As we all are, we're just sort of sitting and waiting for the other shoe to drop and for Donald Trump to be inaugurated, to see what he's going to do with trade policy. But for the most part, especially for smaller companies who don't have the ability to invest overseas, they really just have to sit and wait, see what happens with tariffs, and hope that they can lower prices enough to be able to overcome any kind of tariff barriers that are erected in the US or in Europe or in other countries.
That was our Chinese economy and government senior reporter there, James Mager in Beijing. And some of the global news stories that we're tracking this morning as well. Donald Trump has lost a bid to throw out his conviction in the New York hush money case on presidential immunity grounds. A New York state judge rejected Trump's argument that his trial was tainted by witness testimony. He was found guilty in May of falsifying business records. However, it's not certain that the case will proceed to sentencing as the president-elect continues to challenge the verdict. German lawmakers have voted to hold a national election in 2 months, backing Chancellor Olaf Scholz's plan to end his term early. Scholz called the confidence vote after he fired Finance Minister Christian Lindner, which meant his coalition lost his majority in the lower house of parliament. This sets the stage for an election on February 23. That's 7 months earlier than scheduled. The eastern Chinese cities of Shanghai and Hangzhou have issued alerts for heavy air pollution. They're advising children, the elderly, sick people to avoid prolonged outdoor activities. In Shanghai, where a yellow alert was issued, people are also being asked to travel using public transport and halt major outdoor sports events. We'll have plenty more ahead. This is Bloomberg.
Wednesday, the Fed Fed decides.
The consensus seems to be that you need a beat on payrolls, an upside surprise on CPI, and the Federal Reserve will hit pause.
Yeah, but it's pretty high bar.
All of this seems very predictable.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
People feel good about where the economy is. Demand is obviously pretty strong.
If there were black clouds on the horizon, what would they be?
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Right, welcome back. We're looking at some sectors that are gaining today. So these are sports-related stocks. In fact, these are football-related stocks. You know how to say football in Mandarin?
I thought you were going to teach me, not give me a quiz.
Okay, follow me slowly. Okay, 踢足球.
Oh, come on, Dave. 踢足球.
Oh, yeah, you got it. There we go. Yeah, just say it quickly and act like you're a little bit firm, and you'll convince people. 踢足球. Football.
Oh, gosh. Dave,
kick the ball.
This
there
is
we
embarrassing.
Go. So, shares of companies tied to sports and related equipment are on the up after the Premier Li Chang said China will boost policies to accelerate the development of the football industry in China. McKinsey, who joined us earlier on, Ngai, talked about this is going to be something that remains dominant. Health, fitness, and sports is a big thing you want to bet on as it pertains to Chinese equity markets. Speaking of betting on these markets, CSI 300 session highs right now, going into the first 30 minutes of trades. Some weakness, though, coming through as far as Hong Kong equity markets go. We'll have BNP Paribas Asset Management next to see what their exposure is to this Chinese market.
Welcome back to the China Show. Taking a look at the CSI 300 half an hour into the session. Actually, I've got to say Shanghai, even though we do have... Sorry, now I'm doing weather alerts too, Dave. But
no, go ahead, please. Don't steal my thunder.
But, I mean, there is an air pollution warning in place for Shanghai. I have to say that sky does still look pretty blue. And what else looks pretty nice today is really how the CSI 300 is faring versus what we see with Hong Kong equities that are still in the red for a third straight session. CSI 300, though, is moving higher so far.
Yeah, just to get you more details on that weather alert, Shanghai and Hangzhou warned of heavy pollution ahead. I think the warning came late yesterday on Monday. Yellow alert. But, yeah, I mean, context is important, right? Compared to 10 years ago, heavy pollution, I know that's an absolute objective sort of threshold in terms of PM 2.5 particles, for example. But, the skies, and in fact, when you go to China these days, you barely hear anything because the engines are it's all EVs right now. So the context of air pollution and air quality in China has gone up substantially, has improved substantially over the years. But that said, of course, I think the warning here is no sports activities, I think, is what they're avoiding.
Just limit your outdoor activities if you're a child, if you're a senior, and also if you're in already poor health anyway.
Yeah, and stop smoking, generally speaking. That's
okay, you've expanded that health alert there, Dave.
Do your future self a favor, as they say. #. Okay, session highs in the CSI 300. MSCI Asia Pacific, we are getting a lift. It looked to be, actually, going into the session today, it would be more of weakness. It's really more the strength coming through, and the bulls are starting to buy into some of these dips, with the exception of South Korea, which we'll get to in a moment, because that is really one market that's really taking it straight on the chin. It's the cheapest market in the Asia Pacific. It's even cheaper than China. You look at a forward PE, for example. And what are the opportunities there? We'll talk more about that with BNP in a moment here. The other thing we want to mention, too, is when you look, as we close out the year, and you had a massive rally again in Broadcom overnight, the NASDAQ was at a record, too. I had a look at some data earlier on, and you have U.S. stocks on track to outperform EMs by the most, again, on a quarterly basis in 3 years. We are about 242 trading days into 2024. We have 10 trading days left, U.S. markets, and the S&P 500 has hit a record in 23% of those 242 days, about 53 or 54 times. That's thanks to our markets producer, Ernest, of course, giving us the tidbits on these markets. But it's been a really good time to be an investor in U.S. equity markets. How are Asian investors faring amidst this U.S. exceptionalism theme? Let's bring in Zhikai Chen, head of Asian and global EM equities at BNP Paribas Asset Management. And Zhikai, Chen, not to say that you guys haven't done well, but how does one trade and invest around a U.S. market that can't stop rallying?
I think that's a great question, and thanks for having me. The global equities investors, I think, have a U.S. equities exceptional problem. It's not just EM equities. In fact, if you look at this year and over the last 2 years, EM and Asian equities has actually outperformed MSCI Japan, MSCI Europe. So it's really about the US outperforming that has been astounding outperformance. And I think this probably likely is continue. It's a very consensus call, I think. But right now, it seems as if that we need a catalyst for this outperformance break. But with earnings coming through, it seems as if that that might continue for a couple more quarters more going forward. So within Asia, we still remain cautiously optimistic. We are overweight conservative sectors as well as discretionaries. I think what we've seen in Asia was a very active fourth quarter that was kicked off by the Chinese monetary stimulus via rate cuts across the board. And that has set a tone, I think, for the fourth quarter for Asian equities, at least this year.
What makes you cautiously optimistic about the outlook? I mean, you mentioned earnings there, but you've also got the outlook for the Fed and that expectation maybe we stay high for longer, and that constrains central banks in this part of the world too.
It does. I think you hit it on the nail on the head. I think there's two kind of risks that we see right now. I think the very near-term risk is something that we'll probably get another data point on is this week, I think Thursday morning our time, where we'll see whether the Fed will continue to be confident enough to basically continue to ease interest rates, given the latest data. The economy, obviously, in the US is running a bit stronger than expected, and prices are a little bit sticky. And if they affirm the trend of cutting, then the Asian central banks would be able to ease a bit more if they need to. And I think a lot of the Asian central banks are really waiting for the cues from the Fed on this particular juncture, because actually real rates in Asia are actually quite high at this particular point in time. So they have the capacity to cut, but they're a bit worried about the currency. And I think the Fed move or confirmation this week will probably give them a signal to do just that.
And that takes me into how you're looking at hedging currency risk. And I'm wondering, the dollar's been, I know you're an equity guy, but the dollar's been a bit of a problem recently. I think going into next year, I think the question I have is, which market in the Asia Pacific, or which theme do you think where the currency is actually a consideration at this point in time, or is a challenge really for dollar investors? Let's put it that way.
I think the challenge is anyone that's managing against the dollar, right? I think the dollar strength is quite clear on that front. I think in Asian equities, we probably are a little bit more lucky compared to some other emerging markets currencies. Within Asia, that's probably two currency pairs that you watch out for in terms of whether you want to hedge or you control your country weights to make sure that you're not over-skewed or overly exposed via the underlying equities to that particular currencies. But generally speaking, I would say Asian currencies tend not to move with too much of a volatility versus the USD. And that makes our life a little bit easier, if you will.
Where do you see the potential for the greatest upside? Because I think Dave, Ernest as well, but have been crunching the numbers this morning to look at which markets have the best earnings growth potential going into next year. And at this point, it seems South Korea and also Taiwan are standing out.
Yeah, I think the big IT economies in North Asia tend to stack up quite well. I think a lot of that is based on the pull in on some of these exports they have into the developed markets, particularly in semiconductors. And that's a point where we are quite focused on in Taiwan at this particular point in time. South Korea has a little bit of a challenge. I think investors, earlier before I came on, you were mentioning that Korea has one of the cheapest forward-looking PEs. And this is one area where I think we have to position a little bit more carefully. So within South Korea, we're quite selective. We only have 3 positions there. We are positioning some of the names that you can consider ex-growth, but are actually starting to improve on their shareholders' payout as part of the value up program and increasing their dividends. And that particular stock has actually, in the telco sector, has done decently for us. The other names that we are positioning in the semiconductor front, they have been more mixed, I would say, this year. One of them actually has sold out their capacity next year, but the equity performance has been a bit lackluster this year compared to some of the Taiwanese peers. And on the Taiwanese stocks, on the related AI team, I think Asia is fortunate in the sense that we are indeed going to be critical to the delivery of this AI hardware that the world needs. So I think Taiwan will continue to benefit from that. But even then, I think some of those names having rallied almost close to 100% might take a bit of a breather into the new year until we get more confirmation on the continuation of this order flows on the AI hardware.
The other thing investors are waiting for confirmation, or at least I think clarity, I think is a better word, is really how the Chinese economy responds to stimulus. And you mentioned that one of the areas you own in the Chinese markets is communication services. Apart from that, what other exposure do you have to the greater Chinese equity market? And just underscore the point of why you own that.
We are focused on some of the industries where we believe the Chinese companies have some entrenched competitive advantage. And not surprisingly, that would be the EV side. I think we've seen a lot of that competitive strength come through in terms of their ability to push through some of the EV sales, not just within domestic China, but also overseas. On the batteries front, I think it's very clear-cut that one company stands far and above everyone else in terms of the ability to generate margins and dominate market share in that front. So we're at position in those names. We also like the travel sub-team. We've waited quite a bit in 2023 for it to work, and it has started to really work this year, and we have no reason to doubt that it will continue to work in the year ahead. So those are kind of the specific subsectors that we're positioned in for Chinese equities at this point in time.
Actually, on that point of being optimistic on travel stocks in China, we've actually just seen, or local media, Xinhua is reporting that China will extend visa-free transit stays to 240 hours. So you're looking at 10 days, of course. I think it was around 72 hours previously. So this is quite a big extension that's being given. You sort of wonder, given that foreign tourism is really well off the pre-COVID levels, how much this is also about trying to keep sort of that relationship between China and external parties, outside world. And on that point, how are you thinking about the relationship between US and China and the impact that it's going to have on mainland equities next year?
Certainly. I think that's the trillion-dollar question that's on everybody's mind. And quite frankly, we still need to see where the President-elect Trump and his new administration coming in. We've seen now some of his cabinet position and some of the key members that he's pointing to the trade policy functions. So we have to see what the first silos would be from this incoming administration. I think that's probably the reason why I think there's probably a little bit of disappointment, if you will, given how high expectations was with regards to the political bureau meeting recently, where people are expecting a much more robust set of policies. But if you think about it more carefully, I think the Chinese policymakers are probably also waiting for the reaction from the incoming administration and see what sort of stimulus measures they want to put across to basically protect the growth that they have. I think it's quite clear that the policy direction in China has shifted to guarding growth. I think you've seen this with the monetary stimulus. You've seen this with the support that's been given to the local government debt refinancing, where they're basically trying to guard against a fiscal contraction by the local governments to basically protect growth. So I think the last quivers that you see them keeping in their back pocket right now is to see what sort of a tariffs or what sort of a trade measure will come through with the incoming administration, and then they'll basically respond to that. So combined with the fact that even after the rally that we saw since September, Chinese equities is actually still relatively well valued. And I think you're seeing a very specific, in some specific sectors where earnings are still coming through. That combination gives us a little bit more, makes us a little bit more constructive on Chinese equities. We are roughly neutral in terms of positioning in Chinese equities right now.
All right, Zhikai, thanks so much for your time this morning. That was Zhikai Chen, their head of Asian and global EM equities at BNP Paribas Asset Management, as we do actually start to see Chinese equities moving higher throughout the session. The Hang Seng now just trading flat. But still ahead, South Korean investigators reportedly ready to question impeached President Yoon Suk-yeol over his martial law declaration. We'll have the latest from Seoul ahead. This is Bloomberg.
Welcome back. Let's talk about South Korea here and the latest. So you have the Constitutional Court has started reviewing the impeachment case there for the president. For the details on where we are here, let's bring in Hee-Soo Lee in Seoul for us. So Hee-Soo, take us through what the next steps in the process are going to be like.
Right. The impeachment of President Yoon Suk-yeol by the National Assembly marks the beginning of a significant political change in legal process. The case has now moved to the Constitutional Court, like you said, which has up to 180 days to review the motion and decide whether to uphold or reject it. During this period, President Yoon Suk-yeol has been suspended from his duties, with Prime Minister Han Duck-soo serving as the acting president. In a similar case in 2017, it took the court just over 90 days to finalize the ouster of President Park Geun-hye. If the court again rules against Yoon, a presidential election will be followed within 60 days. So now the court's decision is quite crucial, as it will determine President Yoon's fate, whether he's permanently removed from his office or reinstated. But in the meantime, the political landscape in South Korea will remain quite disrupted.
So how has Yoon responded to the motion, and what's his current position on the matter?
Right. Immediately after the motion passed the parliament last Saturday, President Yoon made a speech where he said he will never give up and called the suspension of his duties as temporary. And in his previous address as well, he said whether he's impeached or investigated, he will face them down with confidence. So Yoon will actively fight against the impeachment motion. Now, with the court looking into the case, the country's joint investigation team is expected to question Yoon. It has been reported in the local media that he has formed a group of lawyers who can defend him during the investigation and trial.
Okay, the next thing I guess global investors in particular want to know is what are potentially, some of the key policies that likely get affected here if the impeachment does go through?
Right. The impeachment is seen disrupting several of President Yoon's key policy initiatives, from economy to foreign affairs, until the court makes its ruling. But since I cover energy, I see a lot of uncertainties building up on South Korea's energy and climate policies. Given that his impeachment raises the possibility of the opposition coming to power, there could be an overhaul of Korea's border energy strategies. Yoon is a strong supporter of nuclear power, and one of his flagship initiatives was his push for oil and gas exploration off the country's east coast. There is now a high chance that these policies might be reversed should the opposition party takes over. Also, the National Assembly was supposed to approve the country's long-term energy policy plan by the end of this month. Now, delays are expected, and the plan is even at risk of being rewritten.
That was Bloomberg's Hee-Soo Lee there in Seoul. And weakness in Asian currencies, that certainly brings some key levels into view as traders brace for further dollar gains under a second Trump administration. For more, let's bring in Bloomberg's emerging markets macro strategist Marcus Wong. And Marcus, it certainly does seem like there's more protection maybe, because we've seen that hedge funds have been ramping up their long dollar positions to the highest now since May. So what are some of the key metrics or key levels that we should be looking out for?
Thanks, Annabelle. Yeah, let's start with the won, right? Since we were just on that very topic that the world is focused on right now. Well, I think the previous high that the won saw was 1444. That was immediately after the announcement of the martial law. So I think that was definitely serve as a near-term resistance for dollar Korea moving forward. It's important to note, that the Bank of Korea has been very proactive. Immediately after the announcement and even days after, there's been coordinated action between the Bank of Korea and the Ministry of Finance to essentially, stabilize markets. And I think this is especially true is if any one weakness is domestically led. For example, let's say the Constitutional Court decides against impeachment, or for example, there's a Korea rating downgrade, for example, that definitely not a base case in any scenario. But if that happens, we could definitely see the Bank of Korea coming in to essentially, protect the won. But of course, taking a step back, if a lot of the won is driven by further tariff concerns, tariff-led weakness, we could choose to see, dollar won, not just the dollar won, but a lot of the dollar Asian currencies rising past key levels. Of course, the other one that the market is watching is dollar yuan. The 7.2 level is something that the PBOC has been actively defending since the US election. So of course, the bearish cases are very known. If you look at the survey versus estimates, between for the CNY fixed today, it's close to 1,000 pips. Suggesting that investors are quite bearish over the yuan. And it is of course the feel of the people on the street essentially is that the PBOC could allow the fix to actually weaken next year. If and when US tariffs are imposed. Again, the data points to weakness, so that is in a sense the path of least resistance for the dollar yuan. And you look at the rupee, for example, another currency that's hovering close to its record low. We've seen, of course, the RBI actively defending the rupee. But of course, we've also seen as a result, it's impacted its forex reserves as well as forward books as a result. So I think definitely key levels are coming into play. Of course, the next near-term event would be the Fed November decision. While I think a 25 basis point cut is fairly been priced in, I think investors will be looking at the dot plot essentially. And I think it's the feel of people on the street that if there is, let's say, 4 cuts, let's say, 3 cuts that are projected for next year, or even 4 cuts of next year, you could actually see, the dollar slip as a result. But of course, if in comparison that only 2 cuts are projected for next year, we could actually see the dollar gain after the decision.
All right, Marcus. Well, thank you so much, Marcus Wong there in Singapore for us outlining the the pickle that central bankers might be in if the dots of the Fed show, of course, a little bit more of a hawkish view on rates this time next year. Plenty more ahead. This is Bloomberg.
Wednesday, the Fed decides.
The consensus seems to be that you need a beat on payrolls, an upside surprise on CPI, and the Federal Reserve will hit pause.
Yeah, but it's a pretty high bar.
All this seems very predictable.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
People feel good about where the economy is. Demand is obviously pretty strong.
If there were black clouds on the horizon, what would they be?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Some of the stories that we're tracking this morning: in South Korea's LG Electronics is said to be thinking of increasing its Indian unit's valuation in a planned Mumbai listing to as much as $15 billion. Our sources say the increase from around $13 billion follows initial feedback from analysts and investors. We're told LG plans to start the Indian unit's IPO roadshow within the next 2 months. Bloomberg's learned that CVC Capital Partners is exploring a potential purchase of Vivendi's stake in Telecom Italia. Sources say CVC is in initial talks to buy Vivendi's 24% holding in common shares of Italy's largest telco. We're also told the buyout firm may eventually seek a takeover and try to break up the business.
We're looking at shares of Meituan right now on the back of news and the statement that Walmart and the company have reached this strategic agreement for the Chinese market, and that Walmart stores in China have fully worked with Meituan on delivery. They will cooperate deeply when it comes to things like instant delivery, product richness, I'm not sure what that means, product operation and digital marketing. That's according, of course, to a statement out of WeChat. The other group of stocks we're tracking here today are some sporting goods, and those specifically related to football, on the back of the Premier, Li Chang, talking about how China will be boosting its support and policies to accelerate the football industry. So a lot of these guys are, as you can see on your screens, limit up, in some cases up about 13, 14%, Bill. Yeah,
Yes.
the McKinsey comment earlier on was quite
Well,
interesting
he's
too.
very
Yeah.
bullish on the outlook for sports, and I think that it's clear that there is that sort of shift, especially among the middle class, to away from Louis Vuitton to Lululemon. That's the story we
Yes.
had a couple of months back,
Yeah.
and we have
Probably
really
a good thing.
Yeah, all right, that's
Health.
it. Japan markets going on the lunch break next. This is Bloomberg. It's 11:29 a.m. in Tokyo. Japanese markets just about to go into their lunch break this morning, and we're seeing them really just catching that drift from Wall Street overnight. It was really that story around the Nasdaq, and we saw a fresh record high for 2024. So just another one. I've lost count definitely by now of how many we've seen this year. But also in Japan, it's really that focus on the BOJ, because we're keeping a very close watch on the Japanese yen there, which is getting quite close to the 155 level ahead of that decision. But it is a level at which we have sort of seen verbal intervention, at least in the past.
We have at 160, and it's one of those meetings where it's coming a few hours after the Fed. So really, in many ways, what the Fed says and does and guides as far as dots go likely affects how they also sort of frame the language around the BOJ. So it could, they could hike this week. It's not a consensus so far. Don't be surprised if they do, of course,
No.
as we go into the Christmas season.
Or if not, it's January.
Or January, that's right. Yeah. The land of the rising rates. There we go. Not just a rising sun, as they say. Rising inflation. 2. Let's have a look at shares of Nissan. Here we go. Fresh 4-year low, 7 days of decline. This has really been the poster child of just the, I guess in many ways, concerns over the competitiveness of Japanese car makers. And I think the news this week actually highlights this. Let me just read that to you. It's a few days back, but it's still nonetheless quite relevant. That the Nikkei reported on the weekend that Nissan has actually slashed its production of its plant in Mexico by 50%. And that's a plant it runs jointly with Mercedes. That's a result of very, very simply weak U.S. sales of the Infinity premium badge, which I guess underscores the broader concerns of this market. The other story we're tracking on the back of a still U.S. story, this is politics though, is Softbank and the planned investment, of course, $100 billion, but we don't know. I think we were talking about this earlier on, whether the $100 billion was something that they came up with as something fresh, or was it already planned, and then let's just have the joint press briefing to announce it.
Matsuyoshi Son went to Mar-a-Lago, and that kind of follows what we've seen from a lot of different tech executives. But he had a press conference there with President-elect Trump, and talking about this plan, as you said, to invest $100 billion in the next 4 years. Now, what's really not clear about it, though, is how much of this is going to be fresh investment, because even ahead of the vote last November, or this November, we already knew that Son was planning to make a $100 billion investment into a chip venture as well. So where exactly this money is going to come from, how it's going to be financed, that's also another really key question in this as well. But Softbank certainly is rising off the back. Some of the other global stories we're tracking this morning as well do relate to the incoming administration, because the Canadian Prime Minister Justin Trudeau is going to be naming Dominic LeBlanc as the country's new finance minister, as after Chrystia Freeland's surprise resignation, citing differences over how to prepare for Trump back in the White House and its increased risk of tariffs on Canadian imports. She's been leading a cabinet group to develop strategies on how to respond to those US policies. Donald Trump has lost a bid to throw out his conviction in the New York hush money case on presidential immunity grounds. A New York state rejected Trump's argument that his trial was tainted by witness testimony. He was found guilty in May of falsifying business records, but it's not certain that the case will proceed to sentencing as the president-elect continues to challenge the verdict. And also on Trump, he says he's going to look at whether to stop the looming US ban on TikTok before meeting with the platform's CEO at his Mar-a-Lago residence. Trump told reporters that he's got a warm spot in his heart for the Chinese-owned video sharing app, which he says helped Republicans gain among young voters. TikTok's parent, ByteDance, has now formally asked the US Supreme Court to block the ban, and that's due to come into force on January 19.
We'll take a look at TikTok. You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok had something to do with that.
Now, we did hear from the U.S. president-elect. If you remember a couple of days back, the big news was, of course, this invitation that was extended, according to CBS, from Donald Trump to President Xi Jinping to attend the inauguration. Donald Trump commented to reporters that the Chinese president has yet to confirm his attendance for his inauguration. He doesn't know if that will be the case. He also slipped in that he did not invite Ukraine's Zelensky to his inauguration, but he's welcome to attend nonetheless. Now, that takes us into really the two, right? The two biggest superpowers in the world, the two big economic forces we have to grapple with. And our Bloomberg opinion columnist Karishma Vaswani thinks that actually in 2025 might actually lead to better ties between the two. And her piece today does touch on this bromance, Karishma, between President-elect Trump and Chinese President Xi Jinping, and why you think this relationship has better days ahead.
Well, David, could it get any worse? I mean, you know, that's a rhetorical question, but things are so bad right now between the U.S. and China that the fact that it has been confirmed by Donald Trump that he has indeed asked Xi Jinping to attend the inauguration. We haven't heard from the Chinese side officially yet. There are reports out there that say Xi Jinping is unlikely to attend, and I would find it very hard to see a situation where he might do that. But I think what you can look forward to, and the two sides must be thinking about this, is in some shape or form having a face-to-face meeting in the first quarter of 2025 at least. I think that is essential to cement better relations between the two superpowers. And, you know, let's not forget, in Trump's first term, he really talked up that relationship with Xi Jinping. He said they had a great relationship, and that is something that he depends on to make a deal. It's very much part of his personality of politics making, and you can see it in some of the stories you've just been talking about already. We've had Japanese billionaires meeting with him. We have him talking about TikTok, and of course, who can forget that famous video on social media with the Indonesian president speaking to him and talking about that relationship as well. So this is very much part of Trump's playbook, trying to make a deal, building on those personal relationships. And I think Xi Jinping is in a position right now, a position of relative weakness, where it might be a very sensible thing to start thinking about that approach.
What else, of course, a lot of different, I mean, everyone basically is trying to figure out how that tariff risk is going to play out, and that sense that maybe they could end up becoming bargaining chips, I guess.
Yeah, I think they are completely a bargaining chip. You've hit the nail on the head. And I think this is, again, very much the strategy that we've seen from the Trump administration, a potential cabinet lineup of China hawks, of course. So on the one hand, you know, Xi Jinping is looking at potentially a very difficult and fractious relationship when it comes to national security issues, for instance. But on the other hand, Trump has used tariffs in the past as leverage. And I think that's very much the situation now. He's talked about that 60%, of course, which, according to Bloomberg economics analysis, could, if played out, see a potential situation where something like 83% of Chinese goods being sold to the U.S., that would sort of just, you know, vanish off the table. I mean, it's very hard to see right now a situation where something like that could materialize, but it's not out of the realm of possibility. And I think this is the key point here. It is being used as a tool of leverage by the Trump administration, and it's a way to get both sides to the negotiating table.
Remind us, Karishma, though, of the, so while, I mean, one can hope, one should hope, we should remain optimistic, and, you know, let's see if both sides do come to the table, but remind us of what the red lines are. What is not on that proverbial table moving forward?
That is an excellent question, and it is the thing on the minds of Chinese policymakers every single day. And Asia watches as well. Well, you know, I always tell the truth, so if you've asked a good question, I will tell you. But one thing to keep in mind, and it is essential for Xi Jinping, he's talked about it already at APEC, it comes up again and again, and that is the issue of Taiwan. It is the one thing the Chinese see as a critical issue for their national rejuvenation of the Chinese nation. Last week's naval exercises around the Taiwan Straits were amongst the largest in decades, according to Taiwanese officials. That was China's way of reminding not just the US, but everybody else in this neighborhood that, look, this island, it's ours. We are eventually going to claim it either by peaceful means or via force. And that is the one thing he does not want to have as a discussion point on any negotiating table between him and Donald Trump.
That was our opinion columnist there, Karishma Vaswani in Singapore. And coming up, why an overly optimistic view of China's rebound could be a headwind for Asia's consumer sector in 2025. Our Bloomberg Intelligence team gives us the hot take next. This is Bloomberg.
The head of BlackRock Investment Institute says big forces are at play and are transforming really how we look at the global economy. Jean Boivin actually told us that investors need to look beyond macroeconomics to take advantage of AI in the energy transition.
This is not a cycle, right? So we've been spending the whole year thinking about soft or hard landing and the Fed in that context, and we're going to hear this week, of course. But we've been of the view that this is not really the right framing. This is not really about an expansion that can turn into recession. It's rather more about a transformation, big forces that are transforming the economies. And that leaves us, like, you know, paying attention to the AI team. That's clearly like a big story. We think there's more opportunity in 2025 there to be generating returns. It's about, you know, geopolitical fragmentation that's going to have implications, energy transition. So these are all these things that will have like profound effect across asset classes. But they're not like a cyclical story.
So when I hear transformation, when I hear AI, I think tech, and I think tech stocks in particular. But is that too narrow? Where else can you broaden that to?
Well, it starts there for sure, because we're in the first phase, right, which is right now to build out this AI capabilities, these factories of intelligence. As we build that out, we need to build it out first before we really get the application. So during the course of 2025, I guess that's going to evolve towards the applications, the phase two, and trying to get more visibility on where we're going to see the big benefits and the revenue streams out of this. And I think that's where like the active management will and the skills will matter more in 2025, whereas now it's mostly about the build out and a few companies.
If you believe in the benefit here, the heft of a few companies, and if you think about the AI promise that many investors have been betting on through the course of this year, what do you then tell investors, Jean, of the people who are betting on the broadening trade? Do you believe in it?
You know, let me start by saying that the concentration we've seen in the S&P 500 and the markets more generally is kind of a feature of this transformation. It's not necessarily a bug. So I guess the first thing that I would say is that like you need to be careful to be reading too much in the concentration as being a red flag. So in fact, we think it's a feature, not a bug, as I said. And eventually we think it's going to broaden out, but that might take some time. So I think like not get too nervous about the concentration is the first point, and be on the lookout for broadening out over the course of 2025. But you know, that might not happen overnight.
That was the BlackRock Research and Investment Institute global head there, Jean Boivin, speaking with Bloomberg's Katie Greifeld and Shonali Basak. Now, we are shifting our attention back to China. We've got consumption stocks very much a focus here because we have really been seeing them slide over the past 5 sessions. We're down 5% so far. But it is after we saw, of course, those retail sales yesterday and the pledges from policymakers to try and lift consumption in a forceful manner over 2025. Of course, there are doubts over whether Beijing has that firepower as well. But let's discuss the outlook for the coming year with Bloomberg Intelligence. Our senior analyst, Catherine Lim, is joining us now from Singapore. And yeah, you're looking at three different keys for consumption or consumer discretionary for next year. But let's start with China and what could be maybe some overly optimistic hopes.
Well, Annabelle, I guess from yesterday's numbers, we've seen that November wasn't exciting. I'm not really surprised by it because we know that there was that Singles Day shift. You, David, and myself, we've talked about it before. But really, I think, the market was expecting that post the September stimulus, we would at least see more support coming through. And when I compare that with the 618 mid-year festival, which also saw a shift in purchases, there wasn't just, enough to show that, we've seen better consumption upticks within the country. And really, I think more is needed for things to look better in 2025. Let's not forget that market is now looking at a 4.5% retail sales growth next year versus what looks like will turn out to be a, under 3.6% retail sale growth this year. So for that to strengthen in 2025, more is needed.
So while we wait for that, what are the bright spots elsewhere in the region here?
Right. So, David, I guess across Asia itself, the big consumption markets, we're really talking about China, Japan, Korea, the developed markets. These are key to the region. And, with the turmoil that we're seeing in South Korea right now, I think, all eyes are on Japan. We continue to see the underlying wage, increment coming through. Spending does seem to be holding up. Again, it's all relative. There is no signs of deterioration at this point in time. We'll have to see how BOJ reacts over the next couple of months.
Right, and on the point that the BOJ is having to consider a consumer that's now again resilient, are there any specific segments in Japan that you're looking ahead to?
Right. It's interesting when we talk about Japan, the locals, and I'm just putting aside tourism because, this can change itself. The locals have actually been supporting the luxury goods sales within the country itself. So, with the underlying consumption strength, wage growth that we're expecting, I do think that that's going to help support luxury goods sales for LVs, for Richmond. And we've seen the companies actually talked about it, that they've actually continued to see very strong growth from the Japanese shoppers.
That was our Bloomberg Intelligence senior analyst, Catherine Lim, there in Singapore, and we'll have plenty more ahead. This is Bloomberg. All right, time now for Trending in China, a look at the top headlines in Chinese state media, and lots of economic news and commentary today. We've got the state broadcaster CCTV reporting on the outcome of a state council meeting that was chaired by Premier Li Qiang. It says China wants decisions made at the Central Economic Work Conference implemented sooner rather than later, and also proactively. Officials reportedly pledging early issuance of special bonds next year and giving local governments the authority and flexibility to decide where to use the funds. The report also says Premier Li pledged to boost policies to accelerate the development of the football industry. And, well, off the back of that, you've got those comments really just putting a foot?
Yeah.
I was thinking of a sports-related pun. Didn't come to me.
Well, drive your boot through. So that was always the tip from my coach before. Drive your boot through the ball and pretend it's not there. And that's going to give it the momentum.
All right. Lucky you're here with me, Dave, because I didn't have that brain power. All right. Xinhua News agency reporting that China is relaxing its visa-free transit policy. It says eligible foreign travellers will be permitted to stay for up to 10 days. That's longer than the original policy of up to 144 hours. Those who benefit include travellers from the US, UK, Canada, and also Russia.
Meanwhile, you had party journal Purges publishing the speech from Chinese President Xi Jinping. He made this in an anti-graft meeting back in January. Now, Xi dismissed internal divisions within the ruling Communist Party as unavoidable, while calling for greater efforts to instill discipline. Min Lo, our China correspondent, is here with us to talk us through this. And is it unusual that we hear about something that happened a few months back? And just give us the context here.
Yeah, so he made this speech at a huddle with the CCDI, which is the anti-graft agency, the Central Commission for Party for Discipline Inspection. So it's not uncommon that the party do not publish such speeches that are made in closed-door meetings, and sometimes they publish them many months or even years after the fact. Sometimes it's used to signal certain policy priorities, and it's interesting that they are publishing it now, about a couple of weeks after that high-level military official Miao Hua was suspended from the Central Military Commission. And President Xi, in that speech, had said that it is important to, quote, turn the blade inward to the party to ensure party legitimacy, because he said that changes in external circumstances as well as in party membership would inevitably lead to party strife. So it's quite rare, I guess, to see or to hear an admission that there is internal conflict within the party. And it also highlights how challenging it is for President Xi to really consolidate his power, given that he has already been implementing this anti-graft campaign for over a decade. And yet we still see very high-level officials, defense ministers, the elites of the military that are being charged or investigated for corruption.
So when you do have that sort of division, possibly, how does it then have an impact on the government's ability to be effective?
Yeah, obviously the intention of this anti-graft campaign is to make the government more effective, but at the same time it does have that unintended side effect of causing some officials to be so afraid of making mistakes that they so-called lie flat, and they stop, trying to innovate or to take risks, to take measures to try to boost the economy, for example. And it looks like top leaders are aware of this. So last week they did indicate that they want to step up incentives for local party officials to innovate. But then if you're a local official, it's really quite a difficult line to really balance between keeping your head down and doing your job versus standing out and doing a good job without really knowing where the red lines are.
All right, that was our China correspondent there, Min Lo. And it is just speaking of President Xi, of course, also going to be a big week for Macau, because he's actually heading to that special administrative region from Wednesday to Friday of this week. And we talk about sort of the fire he's put under the sports-related stocks today. Maybe we see something similar for casinos based on the commentary we get out of him. But, of course, those are in negative territory, the index for a third straight session. But it is an interesting moment for Macau, because he's also there to celebrate a new government administration coming in. And this is going to be the first one, I believe, the first one not led by someone someone born in mainland China, basically. First time we've seen someone born in mainland China leading Macau.
I think ex-judge, I believe, if not mistaken. It's a 3-day visit to Macau from the Chinese president from tomorrow, I believe, and it's hard to see how that is not net positive really for the industry, right? And I think the reason I think it's also quite significant, given just what we just talked about with Min there, this anti-corruption drive. Like, if you recall, years ago, Macau was at the very, and it's really why Macau is operating the way it is right now, why it hasn't really come back as far as VIPs go and the high rollers, because years back this was really at the center of the anti-graft campaign and the high rollers. And I mean, we'll see. We'll see, I guess, what the future looks like. But in any case, of course, it's very central. And I think interesting too was he mentioned President Xi Jinping that he's also very supportive, stating the obvious, of the economy here in Hong Kong. So in other words, the periphery is quite important here.
Yeah, the GBA area, of course, being a key focus. What else we're tracking in the session today is shares of Samsung today. We're actually seeing those sliding around 2% right now, but we did have Goldman Sachs cutting their price target on a lower earnings view. This is a company that's really been affected by losing out perception on the AI race. EV batteries, of course, one to track, because there is a report that there are concerns over US policy issues, and that is driving the sell-off. More ahead. This is Bloomberg.